Alibaba completely crushed it today. We got to look at the chart, and Alibaba is setting up, I think, for a massive run in the long term. All right. We're going to take a look at some amazing charts today. All right. I got some really good stuff that I want to show you guys, and we're actually going to dive into some of the fundamentals behind Alibaba as well. They just reported earnings, and the stock is doing amazing. So be sure to smash that like button, subscribe to the channel if you guys are new, and let's go ahead and jump straight into it. Now, we're going to take a look at the daily time frame. Okay, so this is the daily time frame. You can see we broke a long downtrend. We have the second stage of a reversal forming, right? You have your initial downtrend, then you have your box consolidation, and we're very close to getting a breakout, it seems. When you zoom out and you go to a weekly time frame, there's a clear inverse head and shoulders pattern forming here. We're going to be looking to see if we can potentially get a breakout to the upside. This is a ratio chart here of Baba versus Amazon. And you can see this bottomed out back in the very beginning of 2022, right? Actually, when a lot of the market crashed and a lot of the pain started in the market. When you look at this Baba Amazon ratio chart, I think that Baba is due for its next big rally. All right. And why do I say that? Well, when you look at Amazon, it broke its trend line, it had a huge rally. All right. You take a look at Baba right now, it's trying to break through that rally. And then this white line here is the ratio chart. And look at the weekly MACD. Okay. This is a weekly starting to curl up. Very important. Right. And as I mentioned, we're going to hop into Simply Wall Street and take a look at some of the fundamentals. It appears that it's still undervalued even after its recent rally due to earnings. Now, that's going to be, again, with today's sponsor, Simply Wall Street. There's a link down in the description or the pinned comment down below. You guys can get a 14-day free trial and up to 40% off if you choose to buy one of their plans for the first 100 people that join. That makes it very affordable. It's something I've used for a long time, and I'm definitely glad to have them as a sponsor. All right, let's start off here with our weekly chart, okay? Nice and clean, super simple, right? You can definitely see, what do we have? We have a left shoulder here, we've got a head, we've got a right shoulder. If we can break this neckline right here, it's very possible that Alibaba is going to target one of these areas, okay? Potentially heading up to the 180 range, down to about the 160 range. Okay, this is going to be your target area if we can break through this weekly chart inverse head and shoulders. Now, remember, this is a weekly pattern, so this is going to take weeks and weeks and weeks to play out. This is not a short-term chart pattern. This is something that you just want to pay attention to and look to see if we can get a breakout, retest, and push up into these zones. So I really like the weekly chart setup right here. Things are looking good. The MACD did curl up above, all right, giving us that buy signal back here when we bottomed out, and it has now tickered and crossed above zero as well. So we'll see if we can really gather some momentum and start a nice rally on the weekly time frame, right, on the much larger time frames. When you go down to the weekly chart as well, and this is that Baba Amazon ratio chart, you can see that it appears we're getting a little bit of a breakout and retest right here. So we had that triple bottom formed on this ratio chart again in the very beginning of 2022, and we're approaching back to some of those levels. Now, conditions have changed a lot, and it's always risky investing in China. The way their government and their economy works is much different from ours. So you do have to keep those into consideration. But what I see here, again, I'm looking at the weekly MACD right here, and it's trying to curl up above. If we take a look at the last chart, and we can see once we got that curl up above right here, we had a nice significant little push here on the weekly time frame. And this is just on Alibaba, just on the individual chart. When we look at this ratio chart right here, and we're seeing a lot of tech stocks, and specifically US tech stocks, really start to pull back. So if that is going to continue happening, and we continue to see Chinese stocks, performing really well, I think that BABA could be potentially a good trade. It's definitely something that I'm watching. Now, this is that chart showing Amazon here, and you see Amazon really had that strong breakout. All right, and BABA is just now starting to break out. So we're going to see if Alibaba can really get that follow through and that push to the upside and have a similar type of breakout that Amazon had, which would play out well with our ratio line here, the Baba Amazon chart, and looking for that MACD crossover to the upside, right? We see a continued pullback in Amazon and in big tech, all right? And then we would look to see if Baba can actually start to outperform relative to some of these US tech stocks. Now, this is the daily chart, okay? And all these boxes right here, these are what's known as gaps on the chart, right? So there's gaps all the way up here in the high 200s, mid 200s, low 200s, right? We have a gap right here around 160. Remember that inverse head and shoulders pattern that we talked about? If we can break out, I really think that there's a high possibility that BABA could come down to 160 at least to fill this gap, potentially even head up higher to about 170 or even 180, right? But if we take a look, there are two small gaps down that we need to be cautious of, right? We have this gap down and this gap down. So in the short term, we're just going to be looking at this triangle pattern that we have here, right? Price action is compressing here, and you want to play the gap, okay? Whichever the direction of the breakout or breakdown, if we break down, you'd look to play some of these gaps to the downside. And if we break out to the upside, you'd look to play the gap to 120 and then potentially even 160 for that larger time frame inverse head and shoulders. So I'm liking a lot of the setups that I see. Remember, we talked about, there's essentially three stages to a reversal. Okay. You have, what do you have? Your downtrend. And then what do you get? You get some box consolidation, right? And price action really just chops in between this area. And then ultimately you end up getting that reversal back to the upside. Now, we haven't gotten confirmation of a reversal, but this is something that we're going to put on our radar. So that way, if we do get a reversal, we don't miss the opportunity. Now, let's head on over to Simply Wall Street and see what they've got to say about the stock. So here we are on the Simply Wall Street app. They have a really amazing, or this is the website, but they have a really amazing app as well. It's definitely good for on the go and being mobile. And you can see here, all right, that some of the rewards, all right, it looks good just at an initial glance, right? It's trading at 15.5% below the estimate of its fair value. The earnings are forecast to grow 16.4% per year. Earnings grew by 17% over the past year, and analysts are in good agreement that the stock price will rise by 45%. Okay, so analysts have a much more bullish outlook than the fair value of the stock. And it says here the risk analysis, no risk detected for BABA. And that's from, more of a fundamental standpoint. When you go a little bit into a political standpoint, remember, investing in Chinese stocks does carry, its own different set of risks than investing in some of the US stocks. So you do want to be mindful of that. Now, when you take a look here, you can see that BABA is actually less volatile than the average market volatility and the industry volatility. So that's really, really interesting to see. You can see it's actually outperformed the US market in the past year. Or the US market has slightly outperformed it. Okay, it has underperformed the US market, which returned 4.1%, and BABA returned 2.6%, but it exceeded the multi-line retail industry, which returned negative 0.3% over the past year. So from an industry standpoint, it's still outperforming. It's currently at a 24 times PE ratio. All right. So that's your price to earnings ratio. The price to sales ratio is 2. You can take a look at their earnings, their revenue, their market cap. They really go over everything in here. And we're going to see basically how things go, heading into the future. This is their valuation. You can see they get a 4 out of 6 on the valuation score. You take a look at the PE ratio versus its peers. It's at 24 times versus the peer average of 59. So, really, really nice there. From that standpoint, it's a good value based on its price to the earnings ratio compared to the peer average. And then you can take a look at the price to earnings ratio versus the industry. The industry average is at 20.8, but BABA is at 24 right here. So from that standpoint, it is slightly overpriced and it kind of expensive. When you take a look at the price to earnings ratio versus the fair ratio, it's at 24 times. The fair PE has it at 31.7 times. So it's a good value based on its estimated fair price to earnings ratio. You take a look at the share price versus its fair value, and they do this using a discounted cash flow model, and it's got it at 15.5% undervalued, bringing the value right there, right around 112. Okay. And you take a look at these analyst price targets right here. All right. You can see that the average analyst price target is up 45%, putting it at 137.83. And this is over the next year. Right. And so over the next year, a lot of the analysts are pretty bullish on this. Okay. And the analyst agreement range is spread less than 15% from average. So the median here, all right, is going to be that 137 with a higher range and a lower range, respectively, right around there with about a 15% difference. All right. Forecasted growth does not look the best. All right. They are a really big company. They're not expected to do some massive growth, in the short term or anything like that. Their financial health looks really good. They look good from a financial health standpoint. Their balance sheet health gets an amazing 6 out of 6. You can see their debt to equity ratio looks pretty good here. And you can see also that it seems that they are using their debt safely. So, it's up to you at the end of the day to make your own decisions. I just wanted to bring some attention to BABA. The charts look really good. Some of the fundamentals look pretty good about the stock. Let me know your thoughts down below. I actually just started a free newsletter. Okay. So if you like free trade ideas and you want to get, free newsletters straight to your email inbox, feel free to use the link down below. And you guys can sign up for my free newsletter and get those free trade ideas. I'm going to be sending out anywhere from 3 to 5 emails a week. So, you can look forward to, receiving those. And, it won't cost you anything. And it's a good way to help support the channel and help me grow as well.